I've been out and about in this, and I get people going, great company, you know, or I need some insurance.
Or get out of my life.
Especially when I see you. So, if you're a new agent, and when did you come aboard?
A year ago.
A year ago. So new, meaning that point, 1 year ago. If you don't have any swag,
Yeah.
clothing of some type, we will pay for whatever you want. So if you're a year or less, and will be on the computer at the Blue Cross store. So if you want a jacket, a polo shirt, a vest, a cardigan.
Do they have underwear?
Just ask Jim Cole.
But no depend. There's no depend.
Oh, and Paul, and if you're veterans, you pay us to get some.
If you're a veteran and you have stuff, we have a 50% co-op. So if you're a veteran, we'll let Blue Cross pay 50%. I'll pay 25%, and you pay another 25%, and you can have more swag.
What a deal.
Yeah. See, it's worth coming. So Ann's going to be in charge of the Blue Cross shop if you want to look and see what's available. And so some important dates. The Blue Cross conference is coming up on September 21st. If you haven't registered, be sure to do that. The state fair is coming up. Greg, you're going to be at the state fair?
I am.
Okay. What day?
Thursday, next Thursday. Senior Day.
So Thursday coming
Good
up.
choice.
I don't know how I'm gonna do that, but it's Senior Day.
This Thursday.
So I'm going to be there on Monday, the 31st. So if you're at the fair and you want to look us up, we'll be there. So you're going to be here just 2 days from now?
No, next Thursday, 9th, or September 3rd.
3rd. Okay.
So where is the booth at?
Health fair. It's called the health fair. I'm not sure if it's Care 11, but it's a health fair booth. It's just a couple blocks east of the grandstands. Best I can tell
I think
you.
it's by the U of M building.
Yeah, there's U of M building. Right.
But it's right next to a Prono Pup stand, which
It's real
makes a lot
healthy.
of
And there's a
sense.
gardens, it says there's a gardens there, I'm not sure if it's a beer garden or not. There's a gardens, a U of M building, and then the U,
Yep.
the health fair building is there.
And what else is coming up? Medicare pinpoint training will start in September, I've been told. But, so we're in a great industry. And, you know, there are times when you think, boy, should I be doing this? I was thinking about going into the submarine business, but then it went into a big dive. So I just stayed where I was. So
Well, what time is that Blue Cross Blue Shield meeting? You know?
on the 21st, it's
I think
usually
it's 11.
check in at 11, 11:30, have lunch.
I don't think they want to count.
Okay, our guest from Illinois is Andrea from Illinois Mutual. Yep. So what's coincidental is I've been working with Illinois Mutual for years, and I had a client who's in the trades industry, broke his foot, and he's on claim. And so Illinois Mutual is paying out from something that I marketed years and years ago. The other connection to Illinois Mutual is Craig Besser. So when I started as a student in August of 1974, as a U of M student, Craig was already the veteran. So that's our connection.
2-year veteran at that point.
Right. So take it away, tell us what you know.
Perfect, thank you. Craig, did you have anything that you wanted to add right now?
I'm looking forward. I tried to meet you all, and we're looking forward to the opportunity to partner with you in DI sales. That's basically all I've done all my life is DI sales, and we hope to get you enthused about it, share our passion, if you will, And we think now is the best time ever for you to start selling DI. I was just telling people earlier today that the best time to get in the DI business was 20 years ago, and the second best time is right now. We've got better products, we've got better marketing materials, we've had improvements, we have incentives. It's never paid so well for you to get into the DI business. So we're gonna give you the Kool-Aid today.
Hopefully you're gonna be ready to drink afterwards, yeah. Thank you all for having me today. I'm excited to be here. I definitely have some pretty big shoes to fill because I know most people know the Illinois Mutual rep being Craig Besser, and he's done an amazing job still promoting Illinois Mutual disability income in this area for a number of years. I am with Illinois Mutual now and cover the Central Territory, which is about 12 states, based out of Peoria, Illinois, in the home office, but all up here at least once a quarter, and definitely trying to provide more training and just opportunities to talk about great new changes we've had this year that help make us more competitive and help you see how easy it can be to get into the DI market. One of the good things with working with Illinois Mutual is we have our home office sales support team, so you can always call for quotes. Working through Craig with Paul and our team, you don't have to learn a new software if you don't want to, or new websites. We can take care of all that for you. It's as simple as just picking up the phone, giving the information over the phone, and you have that quote within 5 minutes afterwards, if not before the call is even finished. The team's great to work with there and more than happy to help you out. And if you need to speak up, talk slower, please let me know. I do have a tendency to talk fast sometimes, so if you want me to repeat anything, please let me know. Disability income basically is going to provide your clients with that monthly paycheck if they get sick or hurt and can't work. And I have a bad habit of still calling it disability income, but we've tried to reposition it as calling it income protection or paycheck protection. Because when we hear disability, we all think of that tragic accident or injury that's going to be long term, and that's not going to happen to me, so I don't need what you're trying to sell me, right? Well, in reality, majority of your claims are going to be due to illnesses, or accidents are going to be more short term. It's not the tragic accident or injury that most people are concerned about. So if we say paycheck protection or income protection, it helps overcome that first setback that you get with that. And just helping clients understand the need of what's it protecting. What does your paycheck pay each month? Mortgage, utilities, groceries. And we'll talk today a lot about keeping it a simplified plan, simplified approach, to help make it more affordable and realistic, and not give clients that sticker shock that it's always been known for DIs being so expensive and such a tough underwriting process and things like that. So we'll talk about some different tips to help get you there. One of the easy way you can transition into the conversation is just ask your client, how long could you go without a paycheck if you got sick or hurt and couldn't work? And then kind of sit back and listen to them. Most people, our market's middle America, so most of our clients can't make it more than sometimes one paycheck without having that come in. Other times 30 days is the common, but we also, 60 days, 90 days. We have flexibility to build that plan designed to meet their needs. And not only does it protect your clients, but it protects you. Disability income is a very persistent product. It usually stays on the books for about 12.2 years on average, but our meeting earlier this morning, that gentleman had a case on the books for 30 years, and that client's filed a couple claims throughout that length of time, had a great experience, so he sees the importance of that, is going to keep that policy in force, similar to probably your client that's had the policy for a while, now he's on claim, good experience, he's getting that paycheck coming in still. So protect yourself as well as your clients. I mentioned that disability income, the majority of claims are due to illness. 90% of long-term disability claims are due to illness, only 10% are due to accident. So that's a good, I think, statistic to know, overcoming that setback. Another thing you might hear is that I have work comp, I don't need disability income. Well, 95% of long-term claims happen off the job, not on the job, so they're not going to be covered there. This policy does cover you on or off the job, accident or sickness, 24-hour coverage. So it's a really great plan to make sure that they're protected. And if you work with many small business owners, small business owners are good too, because if they can opt out of the work comp, this policy is going to be cheaper, much better coverage, and just another good opportunity for you to solidify that there. The biggest thing I think with disability income is our number one setback for why we don't sell it is because we don't ask. When I always am asked, who's your competition? My number one competitor is the other products that you're selling. Because we focus on our core product first, which, as you should, But then we forget to ask about the other product lines that they might need. You know, we don't think about that because we only have so much time with our clients. And some of the tools we have will help, you know, maybe us be more proactive with talking to our clients about disability income. What this is basically the Council of Disability Awareness asks consumers what's most important to you. And it's protecting your car, your house, raising your child to the age of 18, providing for your child's college education, and your income potential. Income potential is the most important, but it's the very last thing that we ask about. We get car insurance, we have homeowners insurance, we have savings plans, different accounts like that, but we don't ask about income protection. And so that's just a reminder to us, is if we start asking the question, I think we'll see that we have a lot of clients that are concerned about that and are interested in disability income. This is a few examples of occupation class, and if you want to follow along in the kit that was there on the seat, on the right-hand side, there is the Simples 1, 2, 3 book. And it's kind of our new agent book. Kind of will go over a lot of what we will cover today. If you turn to page 7 and 8, this will give you the same chart that I'm going to go over here. So it's always a good visual. And basically, and that's page 7 and 8 in this book. Based on your occupation, that's going to affect the price, okay? So the riskier occupation you're in, the greater your chances are of becoming disabled on the job, and so you're gonna have a riskier class or premium. Class 5 is going to be our best rated, down to Class 1 is our riskiest, okay? Class 5 is going, for an example, it's all administrative, all office, so all of us, insurance agents, accountants, pharmacists, administrative assistant, nurse practitioners, physician's assistants, they're all going to fall into that Class 5 category, okay? Class 4 is your medical professionals, and that's the doctor, dentist, and surgeon. Not really a big market for Illinois Mutual. We kind of price ourselves out of that market. But not to say we can't still cover them, they just are looking for much higher replacement ratios usually than what we can offer. Class 3 is a little bit more hands-on, but still not a lot of manual labor. It would probably be I'm surprised I'm not a Class 3 because I talk with my hands all the time, and that would be something that you'd think they'd be more concerned with, but that's what you can think of for Class 3. So dental hygienist, physical therapist, massage therapist, your construction company, that they are the on-site supervisor, project management, estimating, but they're not doing the manual labor, they're gonna be in that Class 3. Class 3 is very competitive rates for us with our market. And then Class 2, still really competitive because it's always been our bread and butter. And that's your mechanic, carpenter, contractor, landscaper, plumber, HVAC, you know, all across the board there. Now we also have hairstylists and truck drivers as a Class 2. So long haul truck drivers or short haul truck drivers are Class 2, which great opportunities in those markets as well. And then Class 1, that's your riskiest. And that's either based on the physical dexterity involved in the occupation or the environment, claimed experience, kind of a combination of things. So examples would be police officers, firefighters, welders, carpet installers, roofers. We'll cover them now. We didn't used to cover them. Trying to think what else. Those are some good examples though for you to give you an idea of what the Class 1 will be. The good thing is you don't have to be an expert knowing every single occupation class where they're going to fall. We do have a guidebook that goes A to Z, accountant to zookeeper, that you can reference, and you are also welcome to call the sales team or anyone else so we can help you figure that out, what class they're going to be. Any questions on this?
So are there different definitions of disability in the classes?
Very good question. In the old product, there used to be. Now with our newer product, every single occupation class has a 2-year modified own occupation definition, which basically says if you cannot do the duties of your own occupation, we're going to consider you totally disabled as long as you're not working or engaged in another occupation for wage or profit. So it's that own op, not engaged definition. And that's every single occupation class, every policy, and that's a 2-year period. After 2 years, it goes to any occupation based on prior education, experience, and training. However, we do have optional riders. It's like an a la carte plan. So we have the optional riders now that you can add on to build up that definition. So any occupation classes, they're able to purchase a 2-year pure own occupation definition, which takes out the not engaged and says if you can't do your job, you're considered totally disabled, end of story, even if you are working somewhere else, okay? Then for classes 5, 4, and 3, they have the option to build that longer. So they can extend that own occupation not engaged definition to 5 years or to age 67. They can also add a 2 or a 5-year pure own occupation definition. which takes out that not engaged language again. And this, if you can't do your job, you're considered totally disabled, regardless of what you're doing elsewhere. So it can seem very complicated because there's a lot of options, but it's, you know, we can work that out for you depending on if you want the best definition. A lot of our market being Middle America, they're not as concerned with the longer ONAC definitions. As long as they have at least that modified ONAC, they are fairly comfortable with that. They're not as concerned with the pure ONAC, but you do have the flexibility to build that for them. Any questions on that? No? Okay. So this is just kind of a you know, rough idea of where we're gonna be a good fit. And I'll go over some more options later. One other, I mentioned farmers, they were a class 2. Does anyone here work with farmers? Yeah, okay, perfect. We have a great program for farmers where we can get them benefits based on their herd or acreage size without having to have any tax returns. So it keeps it very simple. And working with farmers, you probably know, it's hard to get tax returns, or they just have so much depreciation expenses that there's a loss, so it's hard to determine benefits there. If you look though, in the kit, and I know it's kind of hard to get all the materials, but there is a brochure on the right-hand side for farmers and ranchers that has this same chart, okay? And it just looks like this. All of these pieces are available for you if you would like me to mail anything out. I'm more than happy to do that. But the Farmers and Ranchers program is basically, they have either 500 acres or 75 plus herd size. This is the highest amount. They can get up to $2,500 per month in benefit on an individual policy and $2,500 on a business expense policy. Okay, and this is all without tax returns. If they want more than that amount, because if they're a larger operation, then we just have to have tax returns to verify that. But this is a great program that a lot of our agents use to keep it simple, at least to give the farmers some coverage there. Any questions on that? How that works? No? Okay. And farmers, they are an occupation class 2. They can get benefits all the way to age 67, or you can just build a short-term plan there, whichever works best. And we have a couple upgrades I'll talk about in a few minutes that they're also eligible for. Before, I'm gonna jump ahead and come to my presentation just to make it easy with keeping the same book out. Maybe. Okay, the next page in this book goes over our most popular sales concept, and this is the MUG plan. Has anyone here heard of the MUG plan before? No? Good, okay. We started with this concept probably about 5 years ago, and the whole idea was disability income for Middle America is a lot different than selling to the white-collar doctor, dentist, and surgeon. That market, they're looking to maximize benefits. They want the longest benefit plan possible and the best definitions and riders, okay? Middle America, we would still quote that, because that's what a lot of the market tries to sell, is to white-collar, but when they're looking at the blue-collar, they still try to quote the same plan design. And what we found is that doesn't work. It doesn't come back as a sale because it's too expensive, and we've given them sticker shock from the beginning. So how do we, rearrange our positioning and our thought process and look to get them benefits that will be realistic for them, keeps it affordable, and helps them understand the need. Because the doctor, they see how many people come in every day that are sick or injured, and they know that it happens all the time. They have to make sure they're covered, right? But anyone else, most of the people that don't see that every day, they might not understand the need or how often it's going to happen to them. So the MUG concept helped us determine, at least help you open the door and have the conversation to help your clients figure out what their needs are, okay? And MUG is mortgage, utilities, and groceries. Let's look to total up this amount with the MUG and get you a benefit to cover this. It's not the maximum you qualify for. It's not a loaded Cadillac plan. It's something simple and affordable to get them a plan in place. Because the best plan is the one in place, right? At least having something. And that's what this whole concept started with. It's worked great because it helps you at least help the client see the need. And then we took that to the next step because we still got a lot of feedback, which is the next page, of why, how do I build that plan design? How do I figure out elimination period and benefit period? Because each client's different. Not every client, some need the check right away and others have enough in savings for 60 or 90 days, okay? So the 3 questions you can ask your client would be, number 1, how much they need in monthly benefit. If you use that MUG concept, it helps determine that amount. Number 2 is, how long will the benefit last? We can go as low as 6 months or 1 year, 2 year, which is our most popular, 5 year, 10 year, or age 67. So there's a lot of flexibility there, depending on your client's needs. And then how long can they go without a paycheck? That's, elimination period. Whatever elimination period you choose, they get their benefit 30 days after that. So if they say that they need, they can make it maybe 60 days, we still wanna go with a 30-day elimination if they can afford that, because that's when they're gonna put their first check. Elimination period options, 30 days minimum, 60, 90, 180, and then 1 year or 2 year for us to build around some short-term coverages there. We don't quote that very often. Typical for us is 30 days, 30 days or 90, 60 here and there, just depending. Okay. Any questions on that? This plan design here in the bottom corner, this 30-day elimination, 2-year benefit, 1,500 benefit amount is our more popular and common plan design. And that kind of has that mug concept. Mug concept 1,500 to 2,000 per month. We keep it simple with a 2-year benefit period. And I get a lot of feedback that, 2 years isn't long enough. I need to make sure they have longer coverage. And just a few things with that. If they can afford the longer coverage, absolutely. But the average length of claim for disability is 2 to 2.5 years industry-wide. Illinois Mutual average is only 1 year, 1 month. So the 2-year, it exceeds ours or fits the gap of the industry. And then it takes about 2 to 2.5 years to qualify for Social Security disability. So you're at least getting them something in there rather than nothing. We'll go back to that whole thing. I'll say that quite a bit probably, but that is what you're doing. What we're trying to do there is get them something to fill that gap until they would qualify for other sources of income, or just get them back to work, they're recovered, and can go on with their plan. Sometimes there's also confusion with when we say a 2-year benefit period, that I take that policy out today, 2 years from now, it's done and I have to reapply, get a new 2-year benefit period. That's not the case. It's actually, the policy is guaranteed renewable to age 67. So as long as they pay the premiums, keep that policy in force, they have the coverage to age 67. Where the benefit period comes into play is per claim. So they file a claim, they would actually receive benefits for up to 2 years during that claim. Let's say that I have a broken arm and I'm only off work for 6 months, okay? I go back to work, and within 6 months after that, if I go back on claim for something flared back up with my arm and I had to go back off of work, then it's the same claim, so I have a 1.5 years left with that claim period, but I don't have to satisfy no elimination period. Okay, that's one option. Or if it's after that 6-month period of me going back to work and I file a claim for a new reason, or even the same reason, it's a new claim, new benefit period, new elimination period, so I have another 2 years worth of coverage basically for that claim. And you can do that multiple times throughout the life of the policy. Okay. Questions on that?
So what's the definition of Social Security disability, and what's typically the waiting period to even qualify for that?
Social Security disability, I believe it's at least 6 months before you can even apply, and you have to be, it's gonna have to be a long-term disability. You're gonna have to be off work for an extended period of time to even.
It's really the inability to do anything.
Yes,
correct?
yeah, it is, I'm sorry, yes, it's any occupation definition, not a known occupation definition. So it is very hard to get qualified for Social Security disability.
Do you have an integration benefit with Social Security?
We do, thank you. We have a few options for how we can build our plan design. Our base policy is just it's a base benefit amount, which is all non-integrated, meaning that you get that benefit from us in addition to whatever you receive from workers' compensation or Social Security disability. So it's never reduced, okay? That's the more expensive option, if you will. But we also have an option, which is using our integrated benefit rider, and that's, it's an optional rider that you add on. And it splits up that total benefit between your base benefit that you still get no matter what, and then an integrated benefit, which is like a Social Security offset. So if you would start receiving income or benefits from Social Security disability or work comp, then that reduces the amount of our integrated benefit rider we pay out.
Yeah, aren't most long-term disabilities have these kind of built into the integrated?
It varies. Ours, you have the option, so we can go all the way to 67, which is an all base benefit, or you can use the integrated. Our biggest competitors is Surety, if you're familiar with them, and in order to get maximum benefits with them, you have to use their integrated benefit rider, which is the Social Security offset. A lot of group plans will be integrated with Social Security and other benefit.
Right, I mean, it just seemed like, well, yeah, okay, you buy a long-term disability, but, I mean, the company doesn't have to pay much out if they qualify for Social Security disability.
Right. Right, so from an individual perspective though, you're guaranteed that you're gonna get this from us, plus whatever you get from other sources if you use the all-base benefit. But using the integrated is a great way to help even reduce the cost even more, and you're guaranteed you're gonna get that benefit, it's just a matter whether it's from us and work comp, or us and Social Security disability. So, if price is a big factor for your clients, it's definitely a great rider too.
And one other quick one.
Sure, yeah.
And so, in the industry, are your companies, if someone, let's say, is on claim, they've structured their policy to go to age, what is it, 67,
Uh-huh.
right? Would your company, or do you know if the others in the industry actually take some active participation in getting them to file for Social Security?
We don't usually do that. So what we will do is, if they have the integrated benefit rider, we'll send a letter each month basically saying, have you qualified for other sources of income? If you have, what are you receiving? And that's, on that side of it, that's just then when we reduce it, but we're not forcing you basically to apply. That's one of the great things I do like about Illinois Mutual is we're not going to force you to apply and not be hounding you to, make sure that you're
But you've
qualified.
seen that with other companies.
I have heard that.
Some companies are very proactive, and that's why you're hearing about it in the marketplace.
Yes.
And that's not an approach that we've ever taken on the individual side. We see that them being proactive aggressively in the group side, very aggressively.
Because those benefits absolutely are coordinated and reduced with the other
Right.
sources of income. Any other questions? Those are really good questions. Thank you. Okay. So this is just kind of how you can build that plan design, or at least start thinking about what your clients might need. And each client's going to be different. But the biggest thing is just keeping it simple for you, keeping it simple for the client, and keeping it affordable. And I didn't really mention as far as the rule of two, but the way I look at the rule of two, we have a few different things. 2-year benefit period is our most popular. And reason being is it meets the industry average of the claim about 2.5 years, exceeds ours of 1 year, 1 month. It also helps keep the premium at 2%. The goal is 2% or less of your client's income where you want your premium to be. Once you get the premium over 2% of their income, it starts to get too expensive. We have that sticker shock moment, they're not as interested. By quoting a 2-year benefit period and using the MUG concept, it helps keep it within that 2% or less. So that is something to think about. And one of the good things with working with the team as far as running the quotes is we can take a look at, okay, here's your client, here's their age, here's their income, run that initial quote before they requested. But if it is out of that 2% range or is out of the budget if they gave to you, that number, we'll work with it and say, okay, can we use the integrated benefit rider to help get the cost down? Can we stretch out the elimination period and add a couple other riders to make sure we're within budget there, and it's gonna be something that you'll be able to sell, and it won't be, you won't get the setback that it's too expensive and I can't afford that. So that does help.
Is the application paper or electronic?
You have both options. With our application, so we have a traditional application and we have a tele application. Traditional is where you're responsible for asking the medical questions. You'll fill in a Part A, which is their personal information, what they're applying for coverage. Part B, asking the medical questions. And Part C is your signature forms like HIPAA and things like that. Then we have the tele app, which is the same Part A and Part C, but you skip the medical questions. You don't have to ask that. Once we get the application, we send an order to Exam 1, and Exam 1 will call the client and ask the medical questions over the phone. They both can be great. My personal preference is the traditional application because you are getting a feel for, does your client have health history? If they do, is it going to affect the underwriting process? When we use the tele application, sometimes we don't know that they are on any medications or had any health history, and then it's a big surprise for why we might have some ratings or restrictions or need medical records. However, they can both work well. The other thing with the tele app is just making sure your client knows someone will be calling them to do the phone interview, because that can delay the process sometimes. With both of those options though, you can do a paper app or you can do a web application through our agent forum. Paper app, we don't have to have the originals, but it does have to have a actual signature on there. But you can fax or email it to us, we'll get the process started. The web application is awesome. It's an amazing tool through our agent forum, and basically you log in. If we ran the quote for you, or if you ran your own quote, you start an application from the quote. It's all electronic, so you're checking boxes, typing in the information. Once you get to the signature pages, you check a box for your signature. If the client is sitting with you, they go through the same process, checking a box for their signatures. It's completed, email to the home office to get the process started. If the client's not with you and you're taking that application over the phone, you get to your signature pages and check your boxes. Then you email a PDF of the application to your client. They open that up, check a box for their signatures, put in their banking information, and then it's emailed. Once they click submit, email to us to get the process started, and you're notified that that we received the application basically. It works really well because if they do say yes to having health history, it'll give a drop-down box for you to say, okay, what's the doctor's name and address, so we can contact them if we need to. What was the date of diagnosis, and ask additional information that we're going to need, which will help on the backside of the underwriting process. Any questions on that? Okay. Anything else I have?
I have one question. Is there a reason that you guys have pinpointed that your claims are 1 year and a month versus the industry average of 2 years?
I think a little bit, some of that has to do with our benefit period. Industry-wide, it's more white collar, because it takes kind of a different market into consideration there. And they're looking at longer benefit periods, 5 years, to 67, where we do sell a lot of that 2-year benefit period or 5-year. I also think it has to do with our market, where some of the white collar clients, you hear all the time, the example is the surgeon, that they do something to their hand or have some type of disability they're not able to do surgery anymore, so they're able to go back to work, maybe teaching, but they have that pure on occupation definition on there, so they're still on claim basically. Where with Illinois Mutual, we have a different market, and it's the skilled trade worker that they have to get back to work if they can. They're not looking at that long-term claim or even own occupation definition, so they're trying to get back as soon as they can. I think that just a combination of things. They're different markets, and we do sell a lot more of that 2-year benefit period rather than the age 67 benefit period. Does that help a little bit? Yeah. Any other thoughts or questions on that or anything else? Okay. While we're still in this book, if you want to go to the next page, this is going to go over 3 of our most popular riders. One of them being return of premium. That's what Illinois Mutual we've always been known for. And that's the second one listed. That's because it's our second most popular rider. That's only number 2 by 1%. It's on almost 40% of our policies. And what this rider does is it gives your client the opportunity where they can receive 100% of the premiums back they paid in on that policy at age 67, minus the premiums that we paid out. So if they never use it, they don't lose it. But if they do, then if they do use it, it just subtracts out whatever we've paid them. A few things with this is it does add about a 25 to 50% increase in premiums for clients under age 40. Over age 40, it's about a 50 to 100% increase in premium. So it can be a bit more expensive, but it is, like I said, our number 2 rider, and it's on almost 40% of our policies. Because I think a lot of times with disability, I talked at the beginning that we don't think we're gonna get disabled, I'm not gonna need this, but looking at it, they understand maybe the need, and it's a great way for them to get their money back, or a savings plan, a forced savings plan, if you will. It is a great rider. A lot of clients, it helps solidify the sale for them, but it's all in how you present it. One of the great things is that it's itemized on the illustration, so you can see what the cost is. And there's a good visual on the next page that will show you the lump sum they can get back at 67 if they never use that, which they like quite a bit. Questions on that?
I just explained, how would you like to have cash back car insurance? Yeah, I'd like that. Well, that's not available. It is available with the disability income.
I like that.
Yeah.
I like that, Mr. Mayor.
I'm gonna call upon you, Craig, for a presentation, old school.
So is that only available then if you go to age 67?
It's not actually, it's any benefit period you can add that rider. Yeah, they just have to keep the policy in force
Until age 67?
to get 100% back.
Okay.
Yeah. Now, if they cancel it after 5 years, they can get a percentage back, but in order to get 100%, that's 67. And let's say that they go on claim, they receive more in benefits while they're on claim than they'll ever pay into the policy. Once they go back to work and they are no longer on claim, we allow them to drop off that rider from the policy because they're not gonna pay for something they're never gonna receive benefits for. So there's another nice feature there. The other 2 riders listed, first one is guaranteed insurability option. This is our number 1 and a rider we include on every single illustration. And what this does is it allows you to go back to your client 5 times in the future with 2 years in between each time and basically increase their monthly benefit by up to $600. And with that's without proving any medical insurability, only just have to prove that their income is increased enough to qualify for that. So if you think about it, we're quoting the MUG concept now. It's not the maximum they qualify for, it's just an amount to cover their needs at this time that they can afford. 2 years from now, their needs are probably gonna be increasing. You can go back, get them a new policy, it'll be a second policy, increase in benefit amount, very small increase in premium, but no medical insurability. So it's a great way to just make sure that you can go back to them. Plus, we all need to do reviews with our clients on a regular basis. Maybe there's another product you could sell them or something else they're gonna need help with at that time too. And this rider usually adds about $1 or $2 a month to the policy to bring that on. Very popular. And then the third one is the retroactive injury benefit rider. And this is like a day one injury. So if they get disabled because of an injury, they meet their elimination period, we'll go back to day one of that injury and pay them their benefit amount for the waiting period, which is a nice feature, especially if we have to stretch out elimination period a little bit to get the costs down. It does help kind of make up for any savings they had to stretch through or bills they couldn't pay. Okay. Questions there? All right, we are finished with this book now. 1 down, 10 to go. No, just kidding. If you look on the left-hand side, the next two things I want to focus on would be the 6th page back, which is the DI underwriting making a difference. And if you will pull out just the 4 pages following that, or just the rest of them, whichever works easiest for you. But DI underwriting making a difference, the new W-2 upgrade, and the exciting DI guide enhancements. Those are the 3 I want to cover. Okay, so with the DI underwriting making a difference, that'll be the first one I start with. This is from an underwriting perspective. How do we keep it simple from having no financials and no exams? Okay, the key is $3,000 per month. If you, with $3,000 per month in benefit, we're not going to require any tax returns or exams, and that's for any age up to age 60 now. Before it would be broken down, the chart as far as age and benefit amount when we require exams. Now it just ages 18 to 60 up to 3,000 as non-medical. So when we get that application, we'll do a prescription check and an MIB, and as long as that matches up or with what was submitted on the application, then it can be a pretty easy issue. If they do have health history, then we'll just go ahead and we'll get the medical records, but still not anything additional on your end or the client's end, okay? That's what my goal always is. I've had a couple cases where it was like a 33-year-old male, and they applied for $3,095 in monthly benefit, so then we had to do exams. And once underwriting, they see, they get that application in there and their exams are requested, it's kind of hard on the back end to change it to 3,000 so it's not medical, because they want to know why are we trying to get away from medical. But I like to make sure that just on the front side of it, if we're close to that 3,000 level, let's keep it at 3,000 or below and keep it a simple process for everyone involved. Okay. The next page, which I'm going to go back here. There we go. Okay. The W-2 upgrade flyer. This is a brand new program that Craig was mentioning. There's not another carrier out there that has this. We started with this at the beginning of the year. And what it is basically is the individuals that are in these markets specifically listed here on the bottom of this page, if they have been a W-2 employee for 2 years and made $30,000 income the last 2 years, we'll give them an upgrade to the next best class. Okay, so it helps us be more competitive in those markets. Dental assistants and dental hygienists, they're on the professional side or paraprofessional side. We've had great response so far this year, and a lot of our agents are targeting that market. I mentioned that most of the DI industry is they go after the white collar, the doctor, dentist, and surgeon, but always walk past the staff. And that's what we've always said is you go after that dentist or the doctor, but you're walking past the Illinois Mutual business, where those clients don't need coverage just as much. Maybe it's not going to be as high of, benefits, things like that, but it's at least getting, you have opportunity there. So with these clients, they are an occupation class 3, but if they get that upgrade, they go to a class 5. So they would have the best rates there. And I do know as far as other carriers in the industry, dental hygienists this year, they did drop them down actually where we were able to upgrade them. So definitely help opening up the market for us a little bit more there. And that wouldn't have been somewhere that we would have been looked to before for disability. So I always like to point that out now. And then the skilled trade workers always been our bread and butter. From a self-employed individual perspective, we've been able to give them upgrades, but now even from the W-2 employees, we can give them an upgrade. They have to be in this market, but I will say if you have someone that's in a similar occupation to this, but they're not listed here specifically, give me a call or send one of us an email, something, we can possibly make an exception to get them the upgrade still. For instance, last week I had a cabinet maker, where a cabinet maker listed in the op guide is a class 2, but it's very similar to a carpenter. They're kind of doing the same thing. So we were able to go ahead and make an exception to give them the W2 upgrade, and they have the rates of a class 3 now. And then this just says mechanics, but I had a diesel mechanic that, you know, a specialty mechanic that we were able to get the upgrade to. So just some things to think about there, a little bit outside of that. These, I'm not telling you how many cases we've been able to help an agent with that have been able to provide higher benefits on our policy because of the upgrade with the same pricing, comparing to another policy they had before, or even just reduce their cost, keeping the same benefit plan design, replacing it to go with an Illinois Mutual policy. So a lot of opportunity there in these markets for disability. And we do have some new occupation-specific flyers this year, that if you have a group of dental hygienists or a group of carpenters that you want to target, we have a piece that for carpenters, plumbers, electricians, nurses, nurse practitioners, dental hygienists, truck drivers, hairstylists. We just got one for realtors today. So a number of different pieces that will target different occupations if you're interested there. Questions on that? No? Okay. The back side of this has our business owner class upgrade. This is something we've always had, and it's a great feature for business owners, where if they've been self-employed for 2 years and made $30,000 net income the past 2 years, we'll give them an upgrade to the next best class. And that's for any small business owner, not just a specific market there. I mainly talked about individual DI so far. We also have a business overhead expense policy for your business owners that will help cover the fixed expenses of the business if they would get sick or hurt and can't work, and just keep the doors open. That's another opportunity for you as far as doing a tax sale for business owners, that they get a 5% discount on both plans. They can get that business class upgrade on both policies and help with just keeping the prices affordable there. Okay. Questions on that? Okay.
I just had one of those pay off. I had
Really?
a client, he constructed sets for theaters and casinos and so forth. And it was business overhead or personal. He only had enough money to do business overhead.
Uh-huh.
So that's what he took out. Then he discovered he had brain cancer, and it was a long process. He eventually passed away.
Oh.
But Illinois Mutual paid out the entire amount. And if it wasn't for that, he had lapsed his life insurance and other stuff. But
Oh my
it made
goodness.
sense. And his logic was, I need the, if I'm not in business, I can't pay my personal, so I'm gonna use the premiums for the business overhead.
That makes, it's a very good point. Plus, if you think about it, how many things are on the line with that business? You know, what did you have to put up basically to get a business loan and different things like that?
Right.
So in that case, if, I'm not sure if he had a family or not, but what would they have lost if he had lost the business in addition to dealing with everything else? So it is a great, both policies are super
Excuse
important.
me, he did have the life insurance. We had 100,000 of life insurance, plus the business overhead.
So I think
Before we
it's great.
move off of that, I just want to comment, you know, everybody in the industry has the business owner's upgrade, and so that's common. What do we, as salespeople, want to do when we meet somebody? We want to kind of set ourselves apart. If you talk to them about this W-2 upgrade, it's going to set you apart, because nobody's out there. The enemy that she mentioned earlier, Assured, they're not doing anything this, so we're an industry leader with this W-2 upgrade. And so we also learned from Andrea that premium, it's a premium sensitive sale. And you can lower their premium simply by upgrading their class. So again, it's gonna set you apart because you have this available and you've made it affordable to them, even more competitive than the competitive rates. And generally, the general rule all across America, when you get into these blue-collar occupations, middle America occupations, if you are marketing a 30-day wait, 2-year benefit period, there's really nobody that can stay with us at that elimination period when you look at premium. And like Andrea was saying, all across America, people need that income to come in. Boy, if they go 30 days, they can probably live 30 days someplace. But a lot of people out there, if they don't have money coming in by that 60th day, then they're in trouble. They're digging into other areas too. So, makes it affordable, so keep that in mind.
Absolutely, thanks Greg. The other piece I have right now is just this exciting DI occupation guide enhancements, and I know it's gonna be really hard to see up here because it's already tiny. But this page just goes over the same things. And the few things I wanna point out here, I won't go over each of them, but at the top section is the carpet installers and the roofers. I mentioned before that we would not cover them for disability. Now we will. They're a class 1, max 5-year. So it opens up new opportunities there for different clients that didn't have opportunity for DI before. And they have some pretty expensive insurances, so I do think it's a good market, you know, still to get them something rather than nothing again. And then in that section of they were class 1 before, now they're class 2. I want to point out the long and short haul truck drivers and the hairstylist. We've had great response from those markets as well, because if you think about it, a lot of those individuals are 1099 or self-employed employees. With the hairstylist, they rent blue space, or the truck drivers as well. They can get that business owner class upgrade. So if they've been self-employed for 2 years, made 30,000 net income the past 2 years, we can upgrade them from a 2 to an occupation class 3, and they can get benefits to age 67 with that as well. So really good markets there to target. And then the nurse practitioner, physician's assistant, I mentioned that before. They were class 4 up until the beginning of this year, which we priced ourselves out of that. Now they're a class 5. The enemy, they have them as a class 3. So they, you know, much better rates there for them with us looking at that market. And then the other one is RNs. RNs have always been fantastic for us. They were a 2 before, now they're a class 3. So even better rates for them across the board as well. Any questions? Yeah?
So 30,000 in 2 years, is that 30,000 per year for 2 years?
Per year for 2 years, yes.
2 years, okay.
Yeah. Thank you. Mm-hmm.
I'm kind of new to this field, but wouldn't a lot of these already be receiving long-term disability through their employers?
That's a good question. In the medical side of it, so the nurse practitioners, physician assistants, some RNs, depending on the type of hospital they work in, it's possible. But most of those plans are gonna be group policies, and it's employer paid, so the benefits are gonna be taxable, where our benefits are non-taxable. But the group policies will be taxable, so if they have a 60% replacement of income on that plan, they're really only gonna be getting 40% because it's taxable.
Okay.
So we talk to them, you know, even if they have existing coverage, our question would be, what's your elimination period? What's your benefit period? And what's the replacement of income or percentage? Like 60%, for example. And then we look to supplement that. So let's get your own policy, because what happens if your employer drops coverage and then, because they can't afford it anymore, and you don't have a policy in force then, but something happens in your health status or has changed in your health status, you can't get coverage anymore. Or what happens if you leave that job and the next employer doesn't offer benefits? You know, then you're gonna be without something. So this way, where you get an individual plan, might not be your maximum, but it's at least something.
And what would it pay in addition to a work?
Yes, absolutely.
So it doesn't coordinate?
Well, we already coordinate it on the front side. So if they have 60% group, then we can do an extra 20%
Okay.
on the individual policy.
Okay.
So, yeah,
Okay. I have another question then. What if a person leaves that field
okay.
and goes into another field?
After the policy's already in force,
Yep.
doesn't matter, doesn't change anything as far as doesn't affect the policy in force. The only difference it'll make is if they actually file a claim, it's based on their own occupation at that time of claim.
At that time?
At
So
that
if they go into a riskier,
Nothing changes
Field.
in premium or anything that way. If it's the opposite, where they were a police officer before and now they're going to be,
an insurance agent?
an insurance agent, exactly, you know, going from a class 1 to a class 5, you might wanna look to reapply, because it could save them quite a bit of premium there.
But they wouldn't automatically do that when they file a claim?
Correct, yeah.
Okay, all right, thank you.
Yeah, any other questions on that? Okay. That's that. The last thing, I think we've covered everything, except 2 things. One is another sales concept, which it's on the right side. Sorry, I know we have so many pieces out right now, but on the right side, looking at page 2 and 3, which is the mug worksheet. I wanted to at least show you this so you can see what that looks like. And then the job A, job B. So do you have the mug? We already went over the mug concept, but this is available for you that I can email it or mail it out to you. And it's a great worksheet to walk through with your clients and figure out what their needs are. And the backside has the quote request form. So then you can, get a feel for what questions do we need to ask to run a quote, ask a couple extra medical questions, so if they have any conditions or medications, which is always nice to be prepared on the front side. And then as far as plan designs. Now, if you're not sure what plan design you want to quote them, you don't have to fill that out. You can just fax this or email it to the sales team, or give us a call, and we can run those quotes just based on the information and give you some suggestions there, okay? That's that piece. But the other one is just another sales concept that I haven't talked about, but it's the oldest one out there, but still works great, and should be a very simple conversation. Would you prefer job A, that while you're working, you bring home $3,000 per month, pay $0 in a disability income policy, but if you get sick or hurt and you can't work, you're bringing home a $0 paycheck? Or job B, you bring home $2,950 per month while you're working, pay $50 in a disability income policy. If you get sick or hurt and can't work, you're still bringing home $2,000 per month in a paycheck. Which would you choose? Seems very simple. One of our longtime life regionals, he also has sold DI and life throughout the years. He kind of uses the same concept but presents it a bit different. He'll say, if you lost $50 today, will that hurt you financially this month? No, I'll make it with that $50. Okay. If you lost $2,000 today, or if you gave me $2,000 today, is that going to hurt you financially this month? Yeah, I'm going to be able to pay some bills without $2,000. Okay. Well, you just committed to $50 not, hurting you financially each month. Let's take that and protect the $2,000 that it would hurt you if you lost that each month by not having a paycheck. And so he kind of gets them to commit at the beginning on a certain, and it can be any dollar, 75, 40, whatever it is. But I like the concept just because it helps get them to understand what we're really talking about, as far as that dollar amount they're committing to. And then last thing is just incentives. Craig mentioned that. And that's there is a flyer here. It is on the left-hand side. I promise it's the last flyer I'll have you pull out. But this talks about our quarterly incentive and our DI Fast Start bonus. Has anyone here written on a mutual policy before? A few? Okay. So every one of you are eligible for our quarterly incentive, which basically is submitting 2 disability applications for $2,000 in annualized premium. Get that submitted and paid for in a quarter, whether it's submitting it now and it pays in the 4th quarter, or submitting it and paying for it in the same quarter. It's a $300 level 1 cash bonus. That was for 2 applications for $2,000 in combined annual premium, okay? Then if you're new with Illinois Mutual, or if it's been a while since you've submitted business, we have a disability fast start bonus, which is the same 2 applications, same $2,000 in combined annual premium. It's an extra $500 cash. So $800 cash bonus for 2 applications, $2,000 in premium. And then with the quarterly incentive, there's additional levels there where you can get up to 600 or 900 based on your production. But it's very easy, I think, once you write those first couple cases and get a feel for the process, how to present to your clients the opportunity. If you can make it a goal, even to sell the 2 apps for $2,000 every quarter, you can earn an extra $1,200 a year, or whatever it is that you want to make your goal. Plus, then you have your commissions on top of that, renewals, and you're just building your book of business even more with your clients there. Questions? Yes.
Did you talk about this part-time?
Oh, part-time. Yeah, if you want to pull out another flyer, I promised I wouldn't ask you to, but it's at the back, towards the back of the right-hand side. Left-hand side. Should be the 3rd page from the back. Well, this is a special program for part-time employees, because in order to get DI, disability income, you have to work at least 30 hours minimum full-time, okay? But if you're less than 30, but at least between 20 to 29 hours per week, we have a part-time program where we can get benefits. They would be a max 2-year benefit period, up to $3,000 per month in benefit, or 60% replacement of income. And you can add a few riders, so they can add the retroactive injury benefit rider, the return of premium, and I think the integrated benefit rider is the other one that's available there. But it's a great way to still be able to get coverage for clients that aren't working at least 30 hours per week. And another program we have is for stay-at-home spouses. And that's if the working spouse is applying for or currently has an Illinois Mutual policy, the stay-at-home spouse is able to apply for their own policy. They can get up to $1,000 per month in benefit as an occupation class 2, max 2-year benefit period. And if anything would happen to them, it's still going to pay them a benefit to help cover the cost of daycare or travel, whatever that might be.
Without an income.
without an income, yep.
Thank you, Andrea. And,
Thank you so much. Thank you all, the questions
Yeah.
were great.
so we're gonna break for a little pizza, but I wanna let you know a little bit about the contracting process. We'd like you to start that early, and we're gonna have copies of the brokerage contract here at Nyquist Financial. And you get the same compensation as working with Direct or another marketing group. We've worked that out with Paul. And so we encourage you to do that right away while this information is fresh in your mind, and to get that process going. We just ask that you put Nyquist Financial in. It'll ask for a...
We're fantastic.
Yeah, fantastic. And you can get all the support that we were talking about, proposal-wise and everything through here, or the 800 numbers. But you'll be working locally like you are with other coverages through this office. And then in addition, as we're in the different communities, myself, then if there's additional training or information that you need, we'll do that on a one-on-one basis with you as well. So the contracting, put Nyquist Financial under GA, and then the only thing standing between us and the pizza is Paul. He's got a couple comments here.
So something that I showed was trained by our original manager. Who knows the story of the goose and the golden eggs? So the story is, so I ran across this fellow, and he owned both the golden goose and the golden eggs, but he only had enough. He only had so many dollars. What would you have him do? Insure the goose or the golden eggs? The goose, because these eggs are what the goose produces. These eggs are the mortgage payment, the house payment, the car payment, etc. So it's kind of a funny thing.
And today, I have associates that even carry a glass jar with. Have you seen the new gold dollar coins? So that kind of makes it fun. He sets that on the table and he does the goose and golden eggs. A little visual too. So.